Mortgage Basic, you ought to know. Understanding the truth behind no cost mortgages or no closing cost mortgages. Okay, so essentially, have you ever stumbled into a mortgage deal that just sounds too darn good to be true? It might go something like no closing cost loan, the lender's paying your cost, you getting lender credit, and yada yada yada. But have you ever stopped and think, how is this done? Well, I want to share with you how this is actually done, right? Because there's two ways to do it. The number one is you're going to get a higher interest rate, just like that. So if let's say today the interest rate is, let's say the interest rate today, the lowest rate, right? And this is assuming after we put all the variables that go into an interest rate, because to get an interest rate, we need to know loan size, FICO score, type of property, etc., etc. And even then, once we know what program we're going into, there's no such thing as one rate. There isn't. So depending on what program it is, right? Every single program is going to always have the lowest interest rate. It's going to have a lowest interest rate. So let's say, for example, FHA. So let's say today the lowest interest rate on an FHA is 5.125. That's the lowest of the lowest of the lowest. Well, that lowest of the lowest of the lowest is going to cost you a pretty penny. It's going to cost you discount points, more money, right? Because essentially you're buying an interest rate that is way below the norm. And let's say the interest rate today that is not costing you is 6.625, right? Just for the purpose of the example. So this rate is not costing you any additional fees, any additional money out of pocket, no discount points, right? But let's say you want one of those no cost loans, lenders paying for closing costs. Well, you're not going to get the 5.125 and you're definitely not going to get the 6.625. You're going to get a higher interest rate. Why? Because an interest rate can cost you money, an interest rate can be neutral, it means it doesn't cost you, and an interest rate can give you a rebate. And that rebate is used to help you pay for closing costs. But if you think about it, who's actually paying for that rebate? It's not the bank, it's you, because you're choosing a higher interest rate, right? So your mortgage payment is going to be higher. Okay, so that's number one. Number two is a lot of times the closing costs will be wrapped into the loan. And that option is more common in refinances. And so if I owe for 100, I might owe for 10, depending on how much the closing costs are being wrapped into, right? Which is still going to yield me a higher mortgage payment. So just remember, if anything, remember this. There's no such thing as free. And there's no such thing as a zero closing cost where you're not paying for it. One way or another, you are always going to be paying for any of those loans that say no closing costs or lenders paying the closing costs. You always are going to be paying for that. So remember that.